If you're going to go into accounting and finance and do some, on a smaller scale, local universities will give you the same education. And at the end of the day, it's really what you make of it.
The voice you just heard is that of John Thomas. John Thomas is the CEO of Laurel Ag and Water, and if that company doesn't sound familiar to you, it probably should. Laurel is an ag service company specifically in the area of ag irrigation. The company came about as a result of Arable Capital Partners, which is a Washington state-based private equity firm that allocated a huge amount of capital back in 2016 in pursuit of acquiring and operating ag service businesses. Their mission is to become the strategic partner for producers and share all the benefits that a vertically integrated ag service portfolio can provide. One of the most important pieces of that portfolio is Laurel Ag and Water, and that's where John Thomas is the CEO. It's headquartered right here in Bakersfield. The company is a roll-up of 4 large regional ag irrigation companies, one of which was Bakersfield's own U.S. Irrigation. Now, John has an interesting education and background in private equity, all of which we get into in the interview. He had a very interesting career on Wall Street at one point, and after meeting his wife, who has roots here in the Central Valley, they decided to make a move from the big city, New York City, and setting of Wall Street to a more family-friendly lifestyle here in the Central Valley. And as it turns out, he was able to put his private equity experience to work right here in the Valley, as it turns out. During the interview, we discuss a wide range of topics, from the role and expectations of money allocators in the private equity world to the current and future environment of the agriculture industry. So stay tuned and let's get on with the show.
Welcome back to the Our 2 Cents podcast, the show where your local professionals sit down with an array of guests to hear their story and impart some wisdom for both business and life-improving skills. This is your place to hear business and community leaders discuss relevant topics that matter to you.
And welcome to the Our 2 Cents podcast. My name is Scott Hansen. I'm your host. Thank you for joining me on today's show and being a listener to our podcast. We sure appreciate your support. I recently was very fortunate to get some feedback firsthand from some of our listeners who let me know how much they like the show. And I can't tell you how great that makes me and the whole team here at the Our 2 Cents podcast feel. So thank you very much. John, welcome to the show.
Thank you.
Really appreciate you being here. Been looking forward to having you on.
Oh, thanks for having me.
So thank you. So you, of course, are with a very big company that is headquartered right here in Bakersfield, and probably a lot of people may not even know that, and some who do may not even know exactly what you guys are doing these days and what your direction is. We're going to get into all of that. I find it real fascinating, though, that you are a transplant to Bakersfield, and you had this whole life before, this whole business life, right, doing many other things in, I think, venture capital and working for corporate America, putting together big deals. Maybe you can kind of tell us a little bit about some of that origin and kind of what your history was before you came in to your current role at Laurel. And then let's get into some of like that transition into Bakersfield, into the local economy, and into your role now. So how did it all start for you?
I'm a small town kid, grew up in Bangor, Maine. So it's a town of about 8,000 people on the East Coast, and was there for the first 20 plus years of my life. Went to school locally. So at the University of Maine before branching out a little bit, and I went to work for a Big Four accounting firm, PricewaterhouseCoopers in Portland, Maine.
I think Maine is like about as far as you can get from where we're sitting right now in Bakersfield, California.
My mom gives me a hard time, as you can kind of hear from my journey. I've slowly moved as far away from them as possible, unintentionally, but it kind of ended up that way. As I slowly moved a couple hours away to Portland, as they closed the office there, they were looking to be more in bigger cities, bigger markets. Yep. So I moved to New York City, where I spent about 9 years in New York City, 3 more with PwC, and then I went to work for Kohlberg Kravis Roberts, KKR, who was the originators of leverage buyouts. Kravis and George Roberts. Ever want a good business book? Read Barbarians at the Gate.
Yes.
Super interesting conversation, a book around the RGA and Nabisco buyout.
Yeah, so I've recently heard about that book, and I haven't read it yet, but I do hear that is a great book. Barbarians at the Gate.
Barbarians at the
And
Gate.
It's a great story in the leverage buyout world, right?
Junk bonds and
yeah. How much of that, just to not go off on too much of a tangent, how much of that would be relevant to somebody interested in the Elon Musk Twitter battle going on right now? Does that happen today like it did in those days and with those buyouts that you were involved in?
No, not so much these days. It's a little more, it definitely happens from time to time, but back then it was a little more prevalent in what they could do in the debt markets, et cetera. So it doesn't happen so much anymore, but it was a really good story of how the business was back then on the LBO,
different
and
era.
how they really got such a bad reputation where private equity these days, I think, still carries some of that bad rap, but there's a lot of good that goes on behind the scenes that I think people don't realize.
Well, anything in moderation is good, right?
Yeah,
as they say, but you take it to the excesses, and that's probably a good example of going too far. Right?
That's exactly right. Yeah, there's, greed. Yeah, the old greed is good, but not always. So anyways, so spent 6 years with them, helping them, spent 3 years public accounting, really helping them go public through the S1 process, which was really interesting. And that was 07, 08, 09. So middle of a financial crisis, trying to go public.
So middle of financial crisis, also post-Enron era, which set the precedent for a lot of what it takes to go public, right? Isn't that
right.
Do I have that right? And so you were already knee-deep in paperwork going into the financial crisis, and then I'm sure that just compounded it.
Yeah, with all the Sarbanes-Oxley stuff. Which,
yes.
While I was in the middle of public accounting, that was all going on.
Yeah.
So I already had some of that background anyway. And so spent 3 years doing that, and then moved into a financial planning role with them. And that really changed the trajectory of my career, because it was strategic planning, sitting with all of their business leaders. So they had private equity business, real estate business, infrastructure investing, all these different things that they were just beginning to grow, and going through the strategic planning process and literally sitting at a desk next to Henry Kravis, who's this amazing in the world business scene, and going through the strategic plan for his business going forward with a group of 4 or 5 of us that put this whole thing together. And so really changed, my thought process from strictly accounting to more of a financial economic based thought process, investment based thought process.
And so you had a lot of formal education before all these roles. How much did you lean on that formal education, or was it all just learn on the job? And I mean, sitting next to these legends of finance who've done this forever in the real world, I mean, was that mind blowing? Was there any correlation between what you learned in school, for example, to what was actually going on out there in the real world?
Great question. 0.
Is that right?
Yeah. No,
I thought you were going to say at least a little bit. 10%, 20%.
No, I mean, I just had a degree in accounting and finance from a state university.
Yeah.
And I think that's one of the biggest lessons I learned in life is like, if you, the big name universities are great and they give a wonderful education. And if you're going to go to work for an investment firm in a big city doing investment banking, absolutely go that route.
Right.
If you're going to go into accounting and finance and do some, on a smaller scale, local universities will give you the same education. And at the end of the day, it's really what you make of it.
Great advice.
At the end of the day.
Yeah.
What you make of it is everything. And it's opportunity based and how do you want to grow? But yeah, I went to the school of hard knocks, so to speak, in terms of my learning curve.
Well, and can you even learn that type of business in anywhere other than in the business? I don't know that you might be able to pick up a little bit from some books or resources and things like that. Even today with all the YouTube, maybe there's a little bit out there, but I mean, I know even in the local real estate business, I mean, you got to get out there and do it to be in it and understand what's really going on. It's hard to get it out of a book or something.
Yeah, you got it. It's experience.
Yeah.
And that's what I tell people all the time. It really just comes down to experience, and going and getting an MBA gives you great connections, and there's a lot of value to that. But at the end of the day, the real world experience of how to apply management techniques, and you can read all these management books and do all these things, but at the end of the day, it's really the tools and the experience of going through it and doing it and understanding it that's really gonna.
And so you're in this financial planning role in a big organization with a lot of funds to employ, I'm imagining, right?
80 at the time they had 85 billion.
And it is their job to employ those funds.
Yeah.
And you have all these different avenues. You mentioned even real estate and equities and all these different markets to choose from. What is some of the strategy that a big firm is looking like? If you don't mind just kind of pulling back the covers a little bit on kind of just the general thinking, a lot of individuals and households, are dealing with, do I put it in Apple stock or this or that, or, do I buy a rental property? So it's a much smaller scale, but it's interesting to hear what the big guys are doing, because I think that does reveal a lot about macroeconomic trends and things that they're looking at to employ this much bigger basket of funds. And a lot of times it's people's retirement accounts and things like that are investing in it, right?
Yeah, absolutely. It's a lot of pension funds and things like that funds all that. And so they're really looking for same investment principles, a diversified investment portfolio. Now, most of them are looking at alternative assets, which aren't always regularly available, us all individually on a day-to-day basis. There's much more availability now. They've been able to create public funds and do things that get you a little more access to those types of investments than you used to be able to. But for the most part, they were looking for specific strategies where they could deploy. At the end of the day, it's billion-dollar investments, be it, and they were just looking for that diversified strategy. So all kinds of different avenues.
And so is it just things that are relatively safe with growth potential, or are they looking for actual arbitrage and things that exist in the market that they're recognizing that nobody else is recognizing? Are they finding that edge or that alpha, I guess, to say that we have found something that other people aren't seeing, or are they kind of trying to employ the funds to some extent with the herd, with the idea that everything's going to kind of rise with the tide?
It's not a herd mentality, but they're looking for, it really varies a little bit. There's definitely some, hedge fund type strategies that they're employing, but on the private equity side, they're looking for good quality companies that they can really take to the next level. Because a lot of companies get to a certain size and maybe management doesn't know how to take them to the next level, or, that's a lot of the case with private equity, right? It's, hey, they can employ a professional management team that can come in and take them from $1 billion to $5 billion or whatever those numbers are. But
yeah, you make a good point. It's not just the money, it's all the clout and people and knowledge and things like that come with that investment, right? That's a big piece of that.
Yeah, that's right. And so a lot of it is like they have opportunity that a lot of people, they get access to deals that a lot of people. There's one of the big lessons that, and we're starting to employ it at Laurel, that I learned while I was at KKR was, they had a pretty much the private equity business. Yeah. And what would happen is they'd get co-investors, and so they'd go out and raise money to go into these larger deals from other places, and they would pay a Morgan Stanley or a Citibank 1%, 2%, 3% fees on top of it. And Scott Nuttall is the guy's name. He's now the CEO of KKR. He says, well, why are we giving away these fees? Why don't we just start this capital markets business and keep more of the same? It's all the same transaction. Why don't we keep more of that in-house? It all goes together.
Sure.
And sure enough, here we are like 15 years later.
Is that right?
They created it, they created it while I was still there, and it's a almost $1 billion business for them.
And you make a great point. I've gone back and looked at the Warren Buffett trades, and his annual letter, and some of the, they'll openly talk about the things in past tense that they've done, recently. And, I think it was the Goldman Sachs deal where they were able to, during the financial crisis, they were able to buy X number of shares of Goldman in order to sort of bail out Goldman, and through Goldman, a lot of other companies, and just provide this huge influx of cash when it was needed. And of course, they were buying a quality company like Goldman Sachs at like 20% off, then it was already down, 50% because of the crash. And then they're buying it at this other lower level. And you go, I want to make that, that guy, Warren Buffett's pretty brilliant. Well, he's also has the means to be able to make a deal like that. Right. And so that's one of those deals that they're not knocking on my door and asking me to make that deal. Right. And there's probably only a few people who even get those opportunities. Right. Or a few firms. Right. So at some point you make this decision to come out here to Central Valley, Bakersfield, California. Yeah. What leads you to that? What caused that?
So while in New York, I met my wife, and she grew up in San Diego and Delano.
Okay.
And so we got to a point where
San Diego and Delano. Those are two totally different places.
They are. So she was in San Diego for 10 years and then moved to Delano for the last 8. And so she went to UCSB and then went to work for PricewaterhouseCoopers in Orange County. Okay. And we both happened to end up in New York within a year of each other and met. She ended up working for me, and the rest is, 15, 16 years later, here we are.
That's great. And somehow she said, we got to go back closer to home, I guess is kind of how that conversation went.
We had our daughter while we were in New York. Okay. And so by the time she was 2, we decided that was not a great place to raise a family. And so her having family out here, we made the decision to move out here. It's kind of, we were going to go to Maine where it was, -20, or Bakersfield where it was 105. And that was an easy decision for me.
I understand that choice.
So we came out here really to raise our family because it's, we had been out here quite a few times.
Yeah,
and I always really liked it out here. Found it to be obviously much more relaxing than New York City. Yeah. But and what we found is it is a great place to raise a family.
Oh, isn't it? Yeah.
Wonderful community, and so we've been really lucky in that regards to be able to kind of...
Yeah, as I ask people about what brings them to Bakersfield, what keeps them in Bakersfield, what brought them back to Bakersfield, that's a really common thread, is a great place to raise a family. And I think that is one of our claims to fame here in this area, the Central Valley and Bakersfield in particular. So I completely identify with that. When you landed here, did you already have a job lined up, or was it...
Not
Kinda
really.
Like, we're here now. Now what are we going to do?
Yeah, it took me a hot minute to figure out what to do. And so I kind of bounced around for a year figuring it out. And I met a couple of local people and ended up getting hooked in with one of the table grape farms in Delano and worked for them for 3 years before taking another job with Jim's Supply Company and the Boylan family. And
another great family, great business.
Yeah, great local family. And worked with them for a couple of years, kind of helping to strategic plan and get their business headed in the right direction, and did that. And at that time, I met Derek Jurasik from Arable, and they were putting together this set of deals for Laurel, and he approached me about taking on a CFO role for them. And it was something, with my private equity background, a relatively unique background for Bakersfield. And so he asked me about coming on board to take on the CFO role. For that. And so it was just something that I'd always wanted to do, was private equity based, backed companies.
Well, and what's interesting about it is that you come from, this environment of big corporate business in New York. You come here to the Valley, there is a lot of big business happening in the Valley. And I don't think a lot of our own residents realize how much goes on here. We know the big industries are ag and oil and so many other things now out in the desert. There's so much aerospace and things like that. But these are huge companies, and I imagine that, like you say, kind of not a common background to be a private equity guy here in the Central Valley, but I think you're well placed. I mean, this is a good spot to be to interject into those businesses that are big operations that need that kind of expertise. So Laurel is one of those. This is a conglomerate, correct me if I'm wrong, that has kind of come together. I say conglomerate only that it is starting to be a group of businesses that have kind of moved into the Laurel umbrella and been bought and then now continue to be developed under this new company. Maybe you can kind of just tell us a little bit about the origin of that, and then kind of where you guys are at and what's in the future. What's the game plan with Laurel?
Sure. So it started 2018, basically did 4 acquisitions of irrigation companies throughout California. So heavy presence in Kern County. 3 of them were here in kind of Kern, Tulare County. The last one was in Lodi that also had a presence in Corning, California. So good range up and down the state, kind of a hole in the middle. And so the idea was to bring, some consolidation to an industry that historically had been very fragmented and really in many ways continues to be very fragmented in order to really match what's happening to some degree on the farming side. I mean, there's a lot of consolidation going on, and you talk about, a lot more private equity coming into the area, and that's absolutely happening, and it's resulting in some of the consolidation that is happening throughout ag. Really, I think oil's already kind of been through it in a lot of ways. And now it's happening with ag, and you're seeing, especially with the water issues in California, it's happening more and more and more. So that was kind of the premise behind it was, hey, let's bring all these great minds together from irrigation and start to build out and be able to move and provide solutions to these companies that are moving up and down the state of California.
Why do you think that's happening? Why is private equity interested in ag? Maybe what has it been? Maybe the last decade, maybe 2 decades. More so, it seems more so than they ever have been. And I mean private equity. I guess I just mean that larger investor, that bigger company coming in and saying, rather than having this very piecemeal or disjointed, like you're saying, operating in many submarkets, let's make this one big market or one big ownership play. Well, what's causing that drive?
I think a lot of it has to do with the steady value of ag land. So when you start thinking about the return profile, it's a real estate play. It's a sub-real estate play for the most part.
Okay.
There's different plays within it, but a lot of it's a real estate play where it's the returns are very steady. And, they're willing to accept generally lower than what maybe a typical commercial real estate is. So it's just viewed as a steady asset class. And so that's one of the reasons why they look to that in California. And if you look at the last, 10 to 15 years of ag land in California, right, the values have gone,
speaks for itself, doesn't it?
2011, right, or 2010.
Yeah.
And it's gone through the roof over the last, 10 to 15 years, and people have seen that opportunity and also wanted to jump on that.
Sure.
But then on the operating company side, a lot of the companies are are pretty steady as well. Where it's, as long as you have the production and, you can invest that production back in, and it's steady cash flowing businesses, which is what, some of it's just another investment strategy for some of these pension funds to get into. And it's a very high quality asset.
Is that bigger money interested in not only the ag ground and I guess maybe operation of that, but also like, for example, Laurel is strictly at this point right now is irrigation focused company that is a very big company. There's probably there's a lot of ag service companies that are like this irrigation. Maybe you can give us kind of a scope of what that looks like. And is that bigger money also interested in those ancillary businesses around ag as well?
Yeah, absolutely. It really revolves around how do you make the operations more efficient. So it's not only like, okay, you've got the farming and the farming operations, but they also need support in making them more efficient and profitable when you talk about the use of the water and the power and the people that go into that. I mean, those are the largest costs.
I'm thinking about, transportation and fertilizers, equipment, and there's just so many areas of this business, right? And so you see that trend bleeding over into those other areas of ag and all.
Absolutely. Senses. And I think you've probably actually seen a lot of it on the fertilizer side already. There's a handful of really big fertilizer chem companies that dominate the market for the most part. But I think on the other services, when you talk about irrigation and trellis and some of the other like developmental services, that's happening as well. And that's one of the things that we're looking to do is just help basically bring that process of development into one set of services in the long term. We're starting with the core of irrigation and then slowly building out, but there's a lot of coordination and a lot of time that it takes to do that, whether it's development or redevelopment. There's a lot of coordination of what it takes to put all those assets in place. I
can only imagine. And so I think that there is kind of this age-old argument of, is it better to have a large company operate very efficiently in industries such as ag and hopefully pass that savings on to the consumer, right? Versus the competitive drive of a lot of smaller operators working both maybe some together and working together in a common goal, but also competing in a sense that prices get driven down for the end user because there's competition amongst these smaller players. What's your opinion on that? I mean, where do you land on that?
Yeah, no, I think it's a great question. And I think it's a really relevant question, particularly right now as we talk about where inflation's at.
Good point.
Extremely, relevant topic to what's happening,
and especially
in
in food and ag. I mean, food prices are going through the roof with so many other things. It's not independent of the rest of the economy. But you're absolutely right, John. Where do we fall in that with this change that's been happening over the last couple of decades? Yeah,
so I mean, I think as you're able to get a little bit bigger, it helps on the purchasing power side. It also helps in what you can do you can hedge and you can do other things. In our case for Laurel, we're able to buy a lot of things in advance in order to, kind of hedge the commodity markets, particularly, PVC pipe, for example, on the development side of ag right now. Pipelines are big as we move water around. Well, being a little larger gives us the ability to buy a little more, stock a little more, and have it available so that when we're going through these supply chain issues and the significant price increases, that we're able to keep prices a little bit better than what some of the smaller local people are able to do, because you do have purchasing power.
And at least more consistent during the ups and downs, right? At least you're able to absorb some of that volatility maybe.
And that's what we've tried to do that, where we can. Obviously, this has been unprecedented in terms of volatility.
Has in so many ways,
so we've tried to do our best to do that, but that's one of the significant advantages, I think, of having some of that consolidation is you do have, and you have the ability to work with the vendors better to secure product on a more regular basis.
Sure, and I'm guessing that's greatly appreciated by the growers and your end users of your products, that they can count on you both for supply but also for some price stability during wild times.
That's been a goal in it, because at the end of the day, look, we're all looking at ROI. Every single grower, whether they talk about return on investment or not, that's what they're thinking about in their head.
And you've got to
call it what you want, but that's what they're thinking about. And, our ability to help them maximize that, be it on price or be it on, hey, maybe you're paying a little more today for what amounts to savings tomorrow. Again, when I think about our business, that's one of the places that we try to focus in on is, there's a value add to having good engineering in your irrigation system and using automation appropriately. I think a lot of people still look at automation as a fun toy as opposed to a useful tool that can reduce, be more efficient with water, be more efficient with people, be more efficient with power, quite frankly, because, when your pumps turn on and off and all these other issues that go to saving money in times of inflation, it's super important.
Yeah, and you beat me to the punch because I wanted to find out about how much of that is being actually used. Our mutual good friend John Tack has given me a lot of insight over the last 10 years or so about how much the industry's changed in the direction of automation. But to your point, we are talking about the agriculture business that I think does not move very quickly as technology is changing. I think there's probably a little bit of resistance to that. And so how much adoption are you having for things like that?
I would say over the last 12 months, the demand for it has picked up pretty significantly.
That's good news.
Yeah. Now, I think the biggest challenge that everybody's running into is learning how to use it and using it appropriately and training their people on how to use it because it is technology.
Yep.
And a lot of the people that are used to going and turning pumps on and running water aren't necessarily technologically sophisticated. Sure. And so there is a learning curve that goes with that. But there can be a big savings that goes with that. There also is a peace of mind of, hey, I know when things are on and off, and I know how, and then there's on the flip side of that and kind of down the road of where I think this will go, we're talking about a lot of the investment funds going into this. There's a whole, the ESG, environmental social governance initiatives that we have to take on more and more and more. And the ability to measure those types of savings in natural resources, and particularly, government of California, being able to measure that stuff, is going to be that much more important. And that's where the automation kind of helps.
Yeah, and as you're saying that, I'm thinking about their budget, them being growers and the ag industry in general. That water supply line item on their budget has got to be projected just to grow year by year, not just on a dollar basis, but as a percentage of their overall revenue. That water component ingredient to their operation has got to be expected to be higher each year. Is that a fair statement? I mean,
as of right now, until the drought goes, it's gonna the price per acre foot's only gonna go up.
Yeah, and if I'm understanding, your strategy is to try to keep that as low as possible for them by introducing this new technology and these efficiencies and things like that.
Yeah, it's to basically help them reduce the optimal amount that they're using per acre.
Yeah,
so that they're still generating the maximum amount of yield. In order to generate the maximum amount of ROI.
Right.
Because it's a fine balance between how much water you use and how much chemical fertilizers you use. All those things, go into maximizing crop yield. And so having a maximum efficient irrigation system goes with that.
Yeah. And so, I guess a good example of that too is, in almond orchards, used to, everything was flood irrigated, and I mean, you almost never see that anymore. I don't know if they're able to do that anymore, but everything's gone drip system in a complete crop that was always flood irrigated. I think, even just 10 years ago, 20 years ago, maybe.
It's probably in the last 10 years. 10 to 15 years.
That's really changed. And so, when I think ag irrigation company, I'm thinking you guys are pretty involved in water in general. There's a lot going on in the state of California. Do you guys get involved in the direction of some of, we see legislation coming down. We see a lot of things, a lot of compliance things that now ag is having to comply to. Do you guys get involved in that?
Not a whole lot on the legislation side. It's, we're definitely keeping up to speed on it, but not a lot of input goes into it. It's much more, I would say, legal based.
And I know that with Laurel's investment in these companies, they probably have a pretty long time horizon. Yeah. So maybe you can talk to me a little bit about that. When this group has come together to kind of form this equity firm up to make this play, what is their time horizon? Are they on a 10, 50 year?
Yeah,
what are they on?
So Arable Capital is the private equity that owns us, and they have a 10 to 15 year horizon on their funds, and it's extendable.
Okay.
So they understand that ag is long term. Typically the perception of private equity is, well, we're going to get in there and in 3 to 5 to 7 years, we're going to turn it around and, send it to somewhere else. And that's not at all what Arable's strategy is. It's to come in and it's a long-term commitment to long-term growth, in support of the ag industry. And that's the core of their fund. It is ag based, and the second investment that they did. And that's the strategy. It's long term.
Yeah. What are some of the biggest challenges that you guys are addressing today?
Great question. Besides water,
well, besides the availability of water, yeah.
The supply chain is a huge piece of it.
Yeah.
Being able to get parts timely. I mean, I think everybody else, even with some of the advantages we do have of being bigger, look, it's still tough to get anything you get from overseas. Resin, probably hear about it a lot. On the PVC side and even on the municipal development side. Yep. It's tough to come by. The biggest, resin's the biggest component. And there's a couple of stabilizers that come from overseas. Mm-hmm. They just have a hard time getting it because of COVID.
The auto industry is having problems with microchips, right? Are you guys dealing with the microchip thing?
We don't have a lot of problems on the microchip side, but it's other raw ingredients that go into these products, because the two biggest components of a typical kind of irrigation system is the PVC pipe and the hose.
Yeah.
And they both are resin-based products.
Yeah.
And so when the resin's not there, and I did a little research as part of our kind of Q1 close, and resin's gone up almost 3x since September of 2020.
Wow.
So it's, over the last 18 months.
Yeah, not even 2 years. Wow, that's wild.
Yeah, and it's, projected to it's not going anywhere. And it's interesting what actually drives it. I had a long conversation with one of the manufacturers yesterday, and it's the municipal development that's actually driving a lot of that.
Is that
because the municipal market, there continues to be a ton of demand for PVC pipe and development. And so what there is for resin in those types of supplies is going there.
That makes a lot of sense.
Versus the ag market, because it's a different type of product. And so that's actually what's driving it. Until that demand goes away, you're not going to see prices of the ag-related products really go down. And
is there more of that we can produce domestically, or are we reliant on supply chains that branch out into the rest of the world?
The resin, a lot of that's, I would say a lot of it's domestic.
Okay.
It's some of the other products where we can't get it domestically.
Okay.
There's a stabilizer that you can't get domestically. I think it comes out of Malaysia. And, so half the time it's sitting out on a boat somewhere and you can't get to it.
Do you find that a lot of the jobs you guys are doing is new development, or is it replacement of existing systems or upgrades of existing systems?
Yeah, so in Kern County, it's mostly upgrades
Okay.
Of existing systems or replacements from redevelopment. We have the branches up north, which it's a big development region right now.
Okay.
North of Sacramento. There's a lot of the growers that are very familiar down here that are buying up land up there.
Okay.
And that's where a lot of the development is. A lot less water issues up there. And so what we're finding is there's a lot more new development happening up there. So that's kind of been the trend, I would say, over the last 2 or 3 years.
Okay. And you guys are all of California. Do you guys span down into the desert, Imperial Valley, down that direction as well?
Yeah,
right?
we do. Yeah. We have a branch in Yuma, Arizona. So we basically go almost end to end. We have a little hole in Fresno that we're opening a location in Hanford over the next couple of months.
Okay.
To help kind of patch that hole, and we're looking at the coast, and without giving away too many of the secrets. But I don't think this stuff's too much of a secret. But yeah, we're looking.
Well, your tone is you guys want to grow. So you want to grow where the business is. It sounds like
and we're going to be aggressive in what we're doing, and try to we got to go in and take some market share and do those types of things. But it's all in the interest of moving with the growers and being able to provide the best solutions for the growers and get and it's at the end of the day, look, it's all about people.
Yeah.
And we want to be able to get the best people and work with them and work with the best growers.
Do you think that the automation that is coming about by new technology, not just in irrigation, but in harvesting and everything ag, do you think it displaces workers, or do you think that those workers' jobs change in nature.
I think they change in nature.
Yeah.
Yeah. I don't think it's a complete displacement. I think, people are going to have to learn new skill sets. I think it's the same thing as all of this technology, right?
Across the board, right?
It's, people are going to have to learn new skill sets. And that's a big thing that we're focusing on. One of the big changes that we're making internally is to hire, I think the trendy term's ahead of people. But it's to focus on our people and focus on skill development and making sure that we're developing people as the industry changes and that they have the right skill sets to continue to be successful and setting them up for success.
It's a new era, right? I mean, it's what it will be required in the future, I think, to continue. Right?
Yeah, that's right. And, and we've got big investments in our people, and we're going to continue to invest in them. We have great people and want to continue to invest in them.
Yeah,
make
good.
Make them right.
What is on the horizon for both the irrigation business and ag? Maybe it's something that people don't really realize or wouldn't understand or know, not being in the business, but what are some of the things you guys are looking forward to in maybe the next 5-10 years?
I think, working through the challenges of Sigma, but I think people know that that's coming, but working through the challenges and what that's going to mean.
I've heard that now for so many years that what is this going to mean and how does it all play out? And does anybody know?
No. Well, they say they do. And I think every year
but they're not going to tell anybody.
No.
We know, but we're not going to tell
There's 3 people that know and they're not going to tell anybody or claim to know. So I think it's just understanding, how that's all going to work and kind of follow in the water. I think it's going to continue to be some of the same trends in terms of what crops come and go. I think it's super interesting to, I guess one of the things, not having been in ag my whole career, right, it's been super interesting to watch the trends of the crops. It's when crops are hot, everybody plants them. Yeah. And then you see about 5 years later, everybody's like, well, that didn't pan out the way we thought it was going to pan out.
I was talking to some local farmers about the almond market, and that's a great example, right, is that it just got a little overplanted and overdeveloped, right? I guess, I don't know. But
that's kind of the general consensus, but table grapes was the same way.
You know what's funny though, and being with your background in private equity for so long and seeing all these different markets, I mean, isn't that true though across so many markets? People see the profit, and when margins grow in a certain area, investment and dollars flock to that market
100%.
To and essentially shrink those margins. Maybe not intending to shrink those margins, but by way of competition and capitalism, I guess at the end of the day, right, is that those margins shrink. And then that capital that flocked there finds out that it might have gotten there a little late, right, or something. So I guess it happens in any business.
Yeah, and I think private equity in into itself probably ran into that same exact issue. And even the ag, even the money that's coming into ag, I think is running into that same exact issue because the more money that's sitting there, the more competition there is to put that money to work. Because what people maybe don't understand on the investment side of it is typically there's a time horizon that funds have to put this money to work. And so as you get to the end of the time horizon, you got to figure out how to put that money to work.
That's right.
And so what ends up happening is it ends up cannibalizing, their own returns. And the more money that's gone into private equity, you've seen kind of some of the historical returns.
No, such a great point. Well, and the other time horizon that you're fighting against is just that rate of return. One of the components to that rate of return calculation is time.
That's right.
Yeah,
absolutely.
So
Absolutely.
You can make a lot of money, but if it took you forever to make it, I don't know what you really did, right? So, good point. Yep. Okay, good. Well, John, I always like to end with a few rapid fire questions. I hope you don't mind, but maybe you can give us just a little bit of, I don't know, words of wisdom. Something like, for an example, what's a great quote that you like to live by, or maybe something that you repeat often or advise people with often?
Sure. Keep it simple here. Quality over quantity. And I think about it in terms of almost everything. And it's probably one of the biggest lessons I try to teach my kids on a day in and day out basis, which is, it's not the number of friends and relationships you have. It's how good are those people and how reliable are the people around you. At work, it's the number of hours you put in. I would much rather have you give me 8 really, really good hours than 12 mediocre hours.
Sure.
Give me quality over quantity. And so that's the big one.
What is a common myth about your job, your industry that that being an insider, but it seems like everybody else doesn't seem to get it?
Yeah, I think one of the things, as being an accounting finance guy by trade, right, it's that accountants are all very square, and it's like they're 100% numbers based, and it's like that's just not.
I know you were telling me about you and your wife's meeting of two accountants meeting in New York. Sparks must have flown, and it must have been fireworks.
All over spreadsheets,
I bet you guys
it was crazy.
Did a lot of calculations.
Yeah, exactly.
You bring up an interesting point that I like to ask accountants is that I saw when I was going to here at Cal State Bakersfield is that a lot of times people would kind of migrate over to the accounting department if they were trying to get away from sales or get away from the communication side. I just want to work on numbers,
Yeah.
And what's funny is I find that the best people in accounting have both skill sets, or that they find themselves coming back out, do the accounting, but then they kind of come out from behind the computer to actually do the business of interacting with clientele and things like that. And I don't know, I think your career has been a good example of that, is that might be where you started, what you intended to do, but very quickly it seems like you found all these ways to communicate, and it mattered at the end of the day that still was a piece of the component. Right?
Absolutely. And that's been a big piece of, becoming the CEO of Laurel.
Sure.
Is really, it's communication, building relationships, and, that type of thing is, it doesn't all, you can be an accountant, but also.
I don't think you can get away with it. At the end of the day, I think that's still where you end up. If you want to do business, it's right. It's a human interaction that requires, 100%. People to, converse and meet and work together.
Absolutely.
So we have a lot of young listeners who listen to the show too, and they're aspiring to do a lot of great things. And so if you were to look back, say, 20 years ago or so, to your younger self, maybe in that college age or even just right after college, if you had advice for yourself, what would you be telling yourself?
Well, I had two things there. If I were telling my college self something, I'd tell them to invest in Apple. And keep it for a while.
And don't sell.
Because that would have been 1997. So Steve Jobs would have just been taken over.
Good time to be a buyer.
Would have been a smart move. But more just like branch out. It's great to be local and set up shop local, but make sure you get some experience outside of your core. Having grown up in Maine, I really grew up thinking that the center of the universe was, within 50 miles of where I grew up.
Yeah.
But the more I branched out and grew up, you learn a lot about the world and the applicability to business and the experiences you get that you can bring back to the local community is huge. So don't be afraid to branch out and get out there and see the rest of the world, because there's a lot.
Great point, John. And as an employer, you bring a lot of value to who is employing you next if you bring a lot more than just that degree or just, whatever my last job was. If you're bringing a more well-rounded package and that you have interesting insights or experiences, right? That does all lend to your value at the end of the day. You bring that to whatever you're doing next. John, thank you for being here again. If after the show somebody wants to reach out, talk to you, discuss Laurel, get in touch with you guys over there, what's the best way that people can find you?
Sure. They can find us on the web at laurel-ag.com, Instagram, Laurel Ag and Water. You can see us on Facebook, pretty much anywhere on social media. It's all under Laurel Ag and Water. Reach out, and happy to discuss any of the topics today.
Fantastic. Well, thank you again for so much for being here.
Thanks
John.
Me. Appreciate it.
The show has been brought to you by the Law Office of Kyle Jones, Troy Burton with the Lynn Company, CPA John Duffield, Scott Hansen Real Estate Lender, broker and investor, and Dave Plivlich, President and CEO of the Marcom Group and MarcomBranding.com. You've been listening to the Our 2 Cents podcast. Check out the show notes for links and more information about the show. Also visit our website at our2centspodcast.com or catch us on Instagram at Our 2 Cents Podcasts. If you've enjoyed this podcast, please subscribe and share with others.